Initial public offerings, IPOs, and the listing process. Introduction. Welcome to today's video lesson on initial public offerings, IPOs, and the listing process. In this lesson, we will delve into the exciting world of IPOs and explore the process by which companies go public and list their shares on stock exchanges. Understanding IPOs and the listing process is crucial for investors interested in participating in the early stages of a company's public journey. So, let's get started. Segment 1. What is an IPO? Let's begin by understanding what an IPO is with the help of this case study. Innovate Tech, from Pune, is led by the visionary entrepreneur, Ravi. They are involved in developing cutting-edge technology solutions that have the potential to revolutionize various industries. Ravi knew that in order to take Innovate Tech to the next level and fuel its growth, he needed to raise substantial capital. After careful consideration, he decided to take the company public through an initial public offering, IPO. Excited about the opportunity, Ravi embarked on the IPO journey, accompanied by his loyal team. The first step for Innovate Tech was to engage the services of investment banks, who would act as underwriters. These banks would guide Ravi and his team through the complex IPO process. They collaborated with financial experts, legal advisors, and regulatory authorities to ensure compliance with the stringent regulations set by the Securities and Exchange Board of India, SEBI. Together, they prepared a comprehensive prospectus, detailing Innovate Tech's journey, its innovative technologies, financial performance, and growth prospects. The prospectus would serve as a vital source of information for potential investors, helping them make informed decisions. As the IPO date approached, Ravi and his team embarked on a marketing and investor roadshow. They traveled across the country, showcasing Innovate Tech's groundbreaking solutions to institutional investors, fund managers, and interested parties. The roadshow generated significant interest and excitement among investors, who recognized the potential of Innovate Tech's technologies. Finally, the big day arrived. Investors eagerly placed their orders, expressing their interest in owning a piece of Innovate Tech. The shares were allocated and allotted based on the demand, ensuring a fair distribution among institutional and retail investors. With the IPO successfully completed, Innovate Tech's shares were listed on the Bombay Stock Exchange, BSE, marking the company's entry into the public markets. As the days went by, Innovate Tech's stock price fluctuated, influenced by market forces and investor sentiment. Ravi and his team closely monitored the company's performance, ensuring they met their regulatory obligations and continued to deliver on their promises. Today's shareholders, both old and new, eagerly await updates, keeping a close eye on Innovate Tech's progress. The capital raised through the IPO fueled the company's expansion plans, allowing them to further develop their technologies, expand their market presence, and create more job opportunities. The IPO had not only provided Innovate Tech with the necessary funds but also increased its visibility and credibility in the business world. Thus, an initial public offering, or IPO, is the process through which a private company offers its shares to the public for the first time, transitioning from a privately held company to a publicly traded one. By going public, companies can raise capital from a wide range of investors and provide liquidity to existing shareholders. Segment 2. The IPO process. The IPO process involves several key steps that companies undertake to successfully launch their shares to the public. Let's walk through these steps. Step 1. Engaging investment banks. Companies typically engage investment banks as underwriters to guide them through the IPO process. These banks help determine the offering price, create the prospectus, and facilitate the sale of shares to investors. Step 2. Due diligence and regulatory compliance. The company goes through an extensive due diligence process, ensuring all financial and legal aspects are in order. They work closely with regulatory bodies such as the Securities and Exchange Board of India, (SEBI), to comply with disclosure and reporting requirements. Step 3. Prospectus preparation. A prospectus, a document providing detailed information about the company, its business, financials, risks, and the offering itself, is prepared. The prospectus serves as a crucial source of information for potential investors. Step 4. Price determination. The underwriters and the company work together to determine the offering price for the shares. This price is based on factors such as the company's financial performance, industry trends, market conditions, and investor demand. Step 5. Marketing and investor roadshow. The company and underwriters conduct a marketing campaign and roadshow to generate interest among potential investors. This involves presenting the investment opportunity to institutional investors, fund managers, and other interested parties. Step 6. Allocation and allotment. The shares are allocated and allotted to investors based on their orders and demand. This process ensures a fair distribution of shares among institutional and retail investors. Step 7. Listing on stock exchange. Once the IPO is successfully completed, the company's shares are listed on a stock exchange, allowing them to be publicly traded. The company becomes subject to the exchange's rules and regulations. Segment 3. Benefits and considerations for investors. Participating in an IPO can offer unique benefits and considerations for investors. Benefits include the potential for capital appreciation and the possibility of gaining early access to shares before they start trading on the secondary market. However, it's important to consider the risks associated with IPO investments, such as market volatility, limited historical performance data, and the potential for higher levels of uncertainty. Segment 4. Post-IPO considerations. After a successful IPO, the company enters a new phase as a publicly traded entity. It becomes subject to ongoing regulatory requirements, financial reporting obligations, and the scrutiny of shareholders and the investing public. The company's stock price will be influenced by market forces, and investors need to monitor the company's performance, industry trends, and other relevant factors. Conclusion. That brings us to the end of our lesson on initial public offerings, IPOs, and the listing process. We explored what an IPO is, the steps involved in the IPO process, and the benefits and considerations for investors. IPOs offer an exciting opportunity to be part of a company's early public journey, but it's essential to conduct thorough research and carefully evaluate investment decisions. Thank you for joining me, and I hope this lesson has provided you with valuable insights. See you in the next lesson. Thanks for watching.